Alright, start from a daily chart. This is going into Tuesday, May 26th. Obviously, Monday, bank holiday. So this candle, uh, right, although so far it's has opened, okay, obviously through a gap higher, and so far has closed at these levels. This is not the official close, but when we go on the lower time frames, we'll see what happened yesterday, right? So on the bank holiday, and this will give us a bias coming inside Tuesday, right, as to what to anticipate. This daily chart is still very bullish, right? Last week, the discount rate of interest was the range of the weekly fair value gap. Price has created, right, a short-term low at these levels. In my opinion, this is not yet an intermediate-term low. There's missing, right? There's missing the other short-term low, but this is an intermediate-term low on the lower time frames. Right, daily short-term low equals intermediate-term low on the lower time frames. So we have to continue being bullish. There's absolutely no reasons to look for short in this market. If you look at standard deviations, well, in terms of premium targets, we still have the range above 30,000. So 30, 31, 32, 33,000, right? Those are all potential objectives for this week, right? In terms of a range of ticks from the open. If we're gonna have an expansion week, I think that anywhere in between 30,000 to 31,000 should be a realistic objective for this week. I mean, the market is basically already at 30,000, so 31,000 give or take. In terms of discount arrays, there's obviously the new week opening gap. There's a bullish order block, and there's a bearish breaker. Sorry, a bullish break, I mean, right? This was previously a bearish order block. Now that the market has traded above it, again, this candle still needs to close, right? This doesn't mean that, well, it most likely won't be the closure at the end of Tuesday, right? Going inside Wednesday because of the bank holiday situation. But what we'll see is that on the lower time frames, okay, price has displaced through the range high. Not only closed it, but displaced above it. So we have a lot of strong PD arrays inside of this range, right? Discount arrays, and they all align around the same levels, right? That range, say, of 29,500, give or take. Okay, having the new week opening gap. Right below it, there's a small fair value gap that's currently breakaway, and there's a bullish breaker and a bullish order block. So in my opinion, no reasons again to assume that the market will trade lower until the daily chart starts proving it to us. Right, it's best to assume that 30, 30.5, 31,000 will be objectives for this week. So that's that for premium and discount levels on the daily. If we go on the 4-hour chart, well, what's interesting here on this 4-hour chart is that being the last week of the month, we can look at a 3-week look back, and this aligns now with, essentially, we can look at the monthly profile at these levels. Right, and here you can see the trending profile so far, which right on the monthly, the month has opened and immediately created the low and has expanded from those levels. Mid candle, right, somewhere in the middle of the monthly candle, consolidates, right, creates a double purge, takes out the highs, takes out the lows into a key discount levels that we looked at on the daily, and from there expands, right? And what you can see yesterday is that at the open, we have a gap up, and this gap up leads to not only, like I was saying, a closure, but a displacement above the range high on the daily. Okay, so if the market will be really bullish this week, in my opinion, it doesn't even need to come back to the weekly open, or at least it doesn't have to do it on Tuesday, right? Again, this is an outlook going inside Tuesday, so the market having expanded and consolidated today on this bank holiday and leaving an important fair value gap here. You can see, right, it cuts through that daily bullish breaker that we're looking at, the range of order blocks here. So in my opinion, very important PDRA for, right, this fair value gap, very, very important for the day of Tuesday. If Tuesday is really bullish, okay, it could simply trade, right, 25-50% of it and expand it. It doesn't even need to trade back to the weekly open. In terms of a monthly profile, I mean, the two options, the two possibilities, in my opinion, at this point are either classic buy, right, a classic buy month, which I believe that's the profile. If not, this can be some kind of swing to Z, right, expansion to consolidation. This week would need to come back in the range, right, and consolidate, failing to expand higher, right, and breaking, displacing old range high, just like it did today, right, on the bank holiday. If we look at a 3-day look back, in this case, since right here there was a bank holiday, and obviously on the daily, as you can see here, right, there's still a full day before this candle closes. I won't be counting the bank holiday as one of my days for the look back. Instead, I'll add it to, I'll include it, sorry, to the range with Wednesday. And so if we look at a 3-day look back, so 1, 2, I'm missing one. So if we look at the profile of this curve, obviously we're in a trending environment, right? The 3-day look back comes from the expansion, right? Previous week's low formed on Tuesday, then Wednesday started expanding, Thursday consolidated, at the PM session expanded higher, right? And it's kind of a grind up, right? If we look at the profile of this curve, okay, so I mean, I don't think this is of any importance for where we are in price right now. So, right, I mean, okay, sure, there's an order block here, but if price will be bullish at these levels, right, doesn't need to do all of this. So we're going to disregard the profile at these levels. Maybe we can look at just the day of Friday here. Okay, so what the day of Friday tells us is that we have a dealing range low, right, represented through a bullish order block. So, you know, if this level were to get revisited, again, it doesn't need to, okay, because this level comes from, right, the high of the bullish order block is right at the weekly open. But because the market from the open has expanded higher and left a fair value gap through the range high, right, I personally, I don't believe that it needs to come back all the way down to these levels today on Tuesday, right, going inside Tuesday. But nonetheless, they're important levels to have on your chart, because you never know what the market can do, right? The market can do something like this for all that matters, or can revisit it, create a divergence, and keep trading higher, right? Creating some kind of Tuesday low of week at these levels. Everything is possible. So in case price were to be around this range, right? So, you know, the range around 29,750 to 29,500, say, then I think it would be a good idea to have the quadrants of the order block up. But again, if not, I believe that the main PD of interest for tomorrow will be this fair value gap. Okay, this fair value gap here, if price is bullish, should create the low of day. But overall, no matter the profile, okay, even in case of a reversal profile or a consolidation profile, the quadrants of this should help you gauge order flow. Again, this is an important fair value gap because it cuts through the previous range high, and this is the fair value gap that creates a daily bullish order block and a daily bullish breaker. Okay, so very important fair value gap. In my opinion, this is the level of interest for tomorrow, the 4-hour fair value gap that comes from the new week opening gap. So level of interest, discount level obviously. If not another discount level of interest, looking at the previous range being Friday, right? There's the dealing range low itself. Right? This here was a shakeout that created the low on Friday, right? A shakeout under the daily open, and from those levels on the lower time frame, price broke structure and traded higher. What you can even do is simply put up some fibs from the dealing range low to whatever the new dealing range high will be, right, as Tuesday develops. And if you see any retracements or fair value gaps, right, retracements around the quadrants or fair value gaps being created through the quadrants of the dealing range, then this can help you gauge order flow. Okay, so main discount PD rate for our fair value gap. Second discount rate of interest, we have the order block of the dealing range low. In terms of standard deviations, so for premium levels, I'm using the ones of the daily. I'm using the daily standard deviation. This guides me overall to the yearly profile, right? I'm using the standard deviations from obviously the low of the year up to this here was the shakeout of Nvidia, right? Price rallied and then at the open gapped lower, and from those levels engineered the shakeout of the year, right? You can see market comes to 0.5, reaccumulates around the range of a higher time frame mitigation block, right? This is also a lower time frame breaker here, a high that leads to the lows, right? And eventually expands into -1 to 1.5, sees a phase of reaccumulation, right? And at the moment we're seeing an expansion, a continuation towards -2 to 2.5. And in terms of the quarter that we're trading in right here, this being the second quarter of the year, if we look ahead in terms of, or at least try to anticipate what the quarterly profile could end up being here, well, so far in terms of the quarterly profile, we're looking at a classic buy. I think it's pretty obvious. The first month of the quarter, classic buy, and the current month that we're in, being the second month of the quarter, also so far trading as a classic buy profile. Okay, so it's going to be interesting to see once it trades at these levels. This is likely going to be around June, right? So summertime. It's going to be interesting to see the development around, anywhere from 31 to 32.5, 33,000. So low hanging fruit, 31,000. That's a premium level, discount level again. We looked at for the week. Okay, obviously I didn't do an outlook going inside Monday because it was a bank holiday, but usually when I would do it on Monday, I would talk about the discount levels of interest, whatever is important coming inside of the week. We have here, right, bullish breaker, bullish order block. And for tomorrow, going inside Tuesday, main PD of interest, a fair value gap, a 4-hour fair value gap created through the range high. Second discount area of interest, the order block of the dealing range low. Okay, so keep these quadrants on your chart and see how price moves around them. See how the sessions, right, what do? Do they come, respect them, and expand out of it? Any fair value gaps created around the quadrants, any divergences created around the quadrants. So I think it's pretty much covered. So let's see what tomorrow gives.